Thanks for joining. Airdrops, we love them, we hate them, people are always disappointed, but we're gonna talk about what makes them successful and, you know, the disappointments. But first, why don't we start with a little introduction amongst yourselves. Who are you? What do you do? How do your platforms contribute to the airdrops? All that stuff. So let's start with you.
Sure. Great to be here. I'm Shane Molidor, CEO and founder of Forged. Forged is free-to-use software platform for blockchain builders to do things like design tokenomics, engage market makers, list on exchanges, manage their cap table, track token unlocks, liquidity, and a bunch more. We operate as a public good. Historically, we were exclusive to the Solana ecosystem. We supported over 300 new launches in that ecosystem, and we just came out of stealth and are now partnering with the Avalanche ecosystem. So free-to-use tools for anyone launching on Avalanche, and very excited to be here.
I'm Dennis. I'm one of the co-founders of Faraway. At Faraway, we're building an interoperable gaming ecosystem that has a growing portfolio of games, developer tools, creator tools, Web3 native communities like Heavy Metal and Legends of the Mara. Prior to Faraway, like most of the people on our team, have a long background in traditional gaming, working at companies like Scopely and Glue, and very excited to be here.
Hey guys, Jason Desimone. I'm the CEO of The Arena. We're the top Socialfi app on Avalanche, expanding multi-chain with our user base. Just past 200,000 users, growing pretty rapidly, and we have an upcoming airdrop, so very excited to dive in.
So let's maybe start with this. I want to get at this conversation from the perspective of like community incentives and not just about like token events and having a free token kind of possibility, event. And so let's start with like why airdrops, why are they important? How does this generate community incentives and activity? And specifically, like what is we feel like we're constantly hearing about airdrops in the Avalanche ecosystem. So what does it bring to the Avalanche ecosystem? Anyone can start with that.
I guess I'll start with more of like the meta or like macro perspective. So I guess airdrops in this most recent cycle were heavily utilizing the methodology of incentivized testnet point systems. And basically you'd have new applications or new protocol launches that want users to start conducting some sort of activity. So if you're a DEX, you want people to both trade as a taker and provide liquidity as a maker. Well, you start allocating arbitrary numbers of points for people conducting those actions. And then just prior to your token generation event, or TGE, there is a airdrop that gives a pro rata allocation to points holders. So why are airdrops important? Because you need to bootstrap decentralization and community engagement in your protocol or application. And in order to do that, you have the incentives of getting rich from receiving the token and token price going up only. So think of it as just a, it's a kickstart or a way to catalyze protocol decentralization on-chain activity. And the hope is that you make those people very wealthy and are able to keep them around for much longer, conducting sort of activities even after that monetary incentive is no longer there.
Yeah, no, that was a great answer right there. I think just to take it from the social perspective with the Arena, exactly as Shane said, what you want to do is like bootstrap a network, right? And this is something pretty unique to Web3 that a lot of Web2 platforms don't really have, which is the ability to reward users and solve that like chicken and egg, which is like, how do I get an early user base before the product's fully ready? Right, there's a lot of competition, especially in the social media world. So when airdrops are used effectively, they could be super powerful in bootstrapping the network. As Shane also said, the key though is how do you make this sustainable? So it's not a one-off event where people are just using it for liquidity and then moving on. So the goal is to pair this with ongoing sustainable behavior. And you could do that in a variety of ways, which I'm sure we'll get into, which it could be data-driven, it could be pairing it with certain feature releases. But yeah, that goal is to solve that initial issue of like, how do I get users and in a non-traditional marketing venue, which Web3 allows for.
I think I was going to ask about this later on, but you bring up points and the methodology of airdrops, and not just looking at the Avalanche ecosystem, but we're widespread in crypto. I'm thinking about like Scroll just announced its airdrop, and Eigenlayer over the last year. Points sort of like drove that. Can you talk a little bit about like what ways or what has changed over the years in terms of like trying to incentivize people to participate in these airdrops? You mentioned points, like what other examples can you sort of give? And feel free to jump in as well if you have any thoughts.
Yeah, absolutely. I've been professionally active in Web3 for about 10 years now, and I was really excited to see airdrops become sort of relevant again in this last cycle. The last time that I saw them relevant was like 2018, and I didn't really see much thoughtful methodology for it. Rather, it was just like a free giveaway. So points were an improvement upon that, right? You had targeted activities that you wanted to encourage people to conduct, and then you'd give a pro rata allocation. That was more efficient rather than guaranteeing a certain quantity of tokens, just because it allows you to finalize your tokenomics prior to a TGE. I think this past cycle, especially within the Solana ecosystem, really exhausted people with points farming to the point where participants in incentivized testnets would be able to conduct an expected value equation. Say, is the cost and expected value of farming these airdrops actually going to outweigh the monetary incentives of the airdrop? And so if you have a few botched launches that don't make people rich, they get less keen to actually airdrop farm. So I think more and more you're starting to see like airdrops in earnest was a good iteration on points program from Sanctum, Cloud launch, and the Solana ecosystem. And you mentioned the Scroll launch. They're catching a lot of flack and controversy from their ecosystem, from people farming for 2 years and only getting 7% of the total token supply, whereas the Binance launch pool has 5%. So I think if I had to guess, you're going to see a transition to more who provides real value. And I think like real value creation for new launches is oftentimes like thought leadership, being an outspoken advocate for the project, being a key opinion leader or KOL, making a lot of buzz on crypto Twitter and getting people really excited versus allocation of capital and like just brute force farming on a lot of these applications.
And to touch on that, as many people in like traditional Web2 user acquisition can tell you, user acquisition in general has become more challenging, more expensive as time has gone on. So having having airdrops as a tool to be able to go direct to consumer is very important, and it's very powerful if it's used the right way. But like Shane was mentioning, there is definitely evolution and fatigue and people misusing it and trying to take shortcuts. And so this is where, really looking at it beyond just the metrics of, or targeting activity that's, easy to fake or easy to game. I think that's probably where things are going to move more, because it's easy to get, attract a lot of attention and attract a lot of numbers, but what that actually means in terms of real usage and real long-term usage, that's, I think, where we were trying to move towards.
I also wanted to ask a little bit about like airdrop strategies for social platforms like the Arena, and you guys can also chip in. How might that differ? Like, how do airdrop strategies sort of differ for a social platform versus something else? You panelists beforehand, I'm sorry I don't remember his name, but he mentioned that there was an airdrop today from the Arena, so maybe you can get a little bit into that too. And yeah.
Yeah, great question. So the first thing you want to do is you want to delay it as long as possible. No, all right. So I think it's super unique on a social platform, because Shane was diving into a lot of like decentralized exchanges and DeFi protocols where you could actually apply like an expected return, right? And it's more data driven. But on a social platform, you have people engaging in social actions, right? On the Arena, we have people making posts, commenting, tipping each other, reposting. It's literally like a social app. So you have to be really careful and thoughtful with how you approach it. It could easily be botted, and you don't want to run into a case where people are just like posting AI art or just like, kind of BS posts, right? So the way we're kind of thinking about this is, and by the way, this is the first cycle of like social apps really. right? And especially ones with airdrops. So this stuff is like brand new. The first main ones to do this were Friendtech. Be that as it may, what happened there. But this is still evolving. The way we're kind of thinking about this is pretty dynamic. So we are looking at user behavior each week. We're trying to filter for bots. So there is a data-driven approach. But also, you want to pair that with meaningful feature releases, right? So otherwise, what you get is people just using this social app just to farm a token. The second they get it, they sell it, and they move back to X or whatever social app they were using before. But the goal is to get user retention from this. So you want to pair your airdrop with your biggest feature releases, which is what we're doing with V2. This morning, we had a surprise airdrop from the Avalanche Foundation. That was not our token. They airdropped 11,000 AVAX to Arena users' wallets. And they took a data-driven approach there, too. They saw who were real users of this app, how many points have they earned. So they were piggybacking off our methodology and rewarding them. And then if you look at what happened, that liquidity stayed in the arena and it flowed through all the content creators. So that was really impactful. And we think ours will have a similar effect. Last thing I'm going to say to wrap this up is you want to make sure the token has like a use case, quote unquote utility, something that has a natural tie-in into the application. Otherwise, the natural tendency is just to sell it and move on. So that's kind of how we're thinking about it. But yeah, there's a lot to learn in this sector.
What about like faux pas? I feel users seem always constantly disappointed in airdrops, right? That they didn't get a fair share, that the activity monitored was not, what they deemed in the right time span or whatever. Like, what do platforms and protocols get wrong about doing these airdrops, and how can they sort of avoid the disappointment that their users might have, or is that always inevitable?
Yeah, I'll just keep this going real quick, and then we could go down. But I think we're able to see kind of what goes wrong in a lot of these, and one of the issues I mentioned is not having enough things or catalysts after the token goes live. But also, I think this is really overlooked. But in social apps, like the culture really matters. So if you create a culture of just mercenary farming, which I think other Socialfi apps have done, that's the result you're going to get, right? You're going to get a spike and then a drop, and it's never going to recover, and people will move on. But if you try to build a foundational culture of people who believe in the product, who actually want to use it, who are there every day to connect and be a part of something, and then the airdrop is an additional reward for those users, that's, I think, where you get that sweet spot and that healthy catalyst, where you want to use an airdrop to reward existing users, but also to onboard new ones, right? You need that balance. And so I think a big faux pas is creating a culture of just mercenary farming versus a culture of organic action that will hopefully sustain it in the long haul.
I think one of the things that I often talked about for projects that use Forged is price is the most important aspect of UX. Price goes up, everyone's going to love you. They believe that your token has amazing fundamentals. Price goes down only. They think you have busted fundamentals and no token utility. So you want to catalyze sustained long-term price performance. Oftentimes when you see high FDV launches with a significant percentage of total token supply airdropped fully unlocked at launch, that's just a supply shock, and they don't have adequate demand drivers to outpace those. So you see big red candles, and people think that there's deteriorating fundamentals or it's a rug pull, and that just catalyzes capitulation. I think in order to counteract that, because what I just said isn't rocket science, and most projects know that. But in this last cycle, we saw a lot of airdrops with short-term vests to try to encourage people to hold on to the tokens they received from an airdrop for maybe a week. So people would say, you get 10 tokens from the airdrop, but if you wait a week, you get 20 tokens. And what I often saw was that people would inevitably wait for the bonus tokens, but then they'd sell into less demand, because 7 days after the launch, most people have moved on to the next thing. So there's minimal bid side liquidity, you crush the price. So you've bought yourself 7 days of exciting price action, and then you get crushed. So I think that is a faux pas, in that it's rooted from the right perspective. You're trying to keep someone around for a while and delay that inevitable sell pressure, but it was just really poorly executed. So I think that this next wave, and hopefully the bull run in the Avalanche ecosystem, is going to have more thoughtful exercises to keep people around for longer, make sure that they're not mercenary farmers, they're continuing to provide value to the ecosystem in order to potentially earn more or even vest out of their initial allocation.
And if we compare the airdrops where, it was a positive reception versus some of the disappointing ones like you mentioned, I think a big difference is that the ones that turned out better or more well received from a product point of view, they really focused on building the product first and having the users there that are willing to use the product and that the product can retain without even the incentive in place in the first place. And so I think that's very important for teams, is to make sure that the product can actually retain users long enough before anything airdrop related goes in, because if you focus on the airdrop too early, you do create this mercenary culture where you don't know if you have 1 million users or if you just have 1,000 bot farmers, and this is where kind of to echo what Jason was saying, really delaying it. And making sure that the product can sustain it before, if it can work without the incentives, layering in the incentives can really fuel this ecosystem further. But making sure that the product fundamentals are in the right place is very important.
That's interesting. This is sort of following up on that, like delaying the airdrop to create sort of a community and that they will keep using your platforms. What are some other key considerations for from the token issuer perspective, not from like what users want, that sort of need to be taken into consideration for strategy in terms of airdrops?
Yeah, happy to start. So I think these were all incredible responses to the previous questions. I think you really want to make sure that your product is mature enough, like across the board, right? That's crucial. You want to make sure that there's the proper sort of token allocations, vesting periods. All of that is really important. If anyone is starting a protocol and thinking of launching a token with an airdrop, you want to make sure, like from a structural perspective, like legal perspective, you have everything sort of buttoned up, and that takes time. A lot of times a token can be a distraction, right? Like you really want to focus on building a product people want to use without it. If you actually look at the most successful applications of this cycle, most of them didn't have tokens. If you take something, I'm saying successful from a monetary perspective, but something like Pump.Fun, all these things, they didn't need tokens to ultimately achieve product market fit. A lot of times a token can be a curse. It could be, it could be an incredible catalyst for growth. It really depends how you execute upon it. But yeah, like I was kind of, I was joking about the delay. Well, not like we've delayed for a while and it's become a meme, but it was really to allow us to become more mature as a product, get everything in place. And that is how you kind of get people who naturally want to hold on for a longer term and deploy that token, and not just these artificial maneuvers to try to get people to hold, like wait an extra week and you'll double your allocation. You should create something that people naturally want to hold and be a part of long term.
I guess I'll just get tactical with things. 3 things to consider would be the tokenomic structure and the fully diluted valuation at your token launch. Second, the market maker engagements and the implications that they could have on that. And then third, exchange listing cooperation and implications that an airdrop could have on that. So with the tokenomics, I always encourage projects to think in US dollar terms, right? If you're intending to launch at 100 mil FTV and you want to allocate 10% to an airdrop, great, you're going to have 10 mil worth of tokens in circulation in the hands of likely sellers. Historically, it's something like an 80% sell rate on airdrops, only 20% of retention. So do you have 8 mil worth of buy-side demand at the open? If so, you trade sideways. But people in crypto expect 3 to 5x at launch. So now you have to multiply that and start asking yourself, do I have sufficient demand to counteract the supply shock? 2, market maker engagements, they can turn very predatory and parasitic. Everyone needs to work with a market maker to encourage adequate liquidity post-token launch. But your market makers, if you don't give them the opportunity to profit, and that could be caused by aggressive sell pressure from an airdrop, they might turn into aggressive short sellers themselves because their options are so out of the money. Lastly, exchange listings. Exchanges are historically very predatory when it comes to listing fees. I say that as a former CEO of a centralized exchange. Oftentimes there are hidden fees, security deposits that are entirely dependent on price performance. So if you don't put your token in a position to succeed, those listings can cost you a ton of money. And I've seen tons of teams burn through their entire operating budget on go-to-market and not think about post-TGE sustained operations without selling tokens. And that's a big red flag for a project. So those are the three kind of like tactical considerations that I would say for thinking through an airdrop.
I wanted to ask sort of about secondary markets. We've done some reporting at CoinDesk on this concept called liquid vesting, which is kind of oxymoronic, right? Like, isn't the whole point of having a vesting period for that, tokens cannot be traded, but now all of a sudden it will allow, like, this concept will allow investors to trade tokens before the vesting period is even over. So what do you make of those kind of concepts or just anything in the secondary markets? And do they defeat the purpose of an airdrop?
I love it. I think it's just accelerated price discovery, determining fair value for an asset. It's basically a beginner's version of derivatives markets. You give new investors the opportunity to determine what they think fair value is of the asset. If you just think about spot markets, so no derivative markets or no ability to trade pre-vested tokens on like second lane, then unlocks from your emissions are historically highly correlated with price depreciation. There was a great research report from Six Man Ventures on that, basically a high R squared. For any token unlocks, price tends to go down because it's shifting the supply curve out. So if you allow investors that have a really low cost basis to take profit on pre-vested tokens, they'll likely be at a discount to what the prevailing spot is, you basically get a new wave of investors with a higher cost basis. And that can kind of serve as like a floor if you believe people are rational and they won't sell unless the value of the tokens exceeds their cost basis. So I love it. I think it's like accelerated price discovery so you don't get as aggressive of supply shocks when tokens unlock via programmatic emissions or investor unlocks.
And let's talk a little bit about scams, right? Like that's a big part of airdrops and just crypto Twitter in general is probably filled with like all sorts of accounts pretending to, be another protocol claiming there's an airdrop. How do you sort of avoid that, or are scams sort of inevitable also with the nature of an airdrop? What do you do to sort of protect users, protect your platforms? Let's start with anyone, or maybe let's start with Dennis.
I think from a user point of view, it's really doing due diligence on what you're engaging with, and looking at the teams, looking at the partners, looking at the backers of the different projects. I think there's a ton of great teams in crypto, so it's like given how many projects are pre-token or pre-airdrop, there's definitely plenty of high quality things for users to engage with. So I think it's like if you willingly go out, further out on the risk spectrum trying to find something that's earlier or has kind of less clear signal behind it to where you could fall into this. I think that's just something that as a participant you need to be making a conscious choice about it, and knowing that there is risk involved, and that's something that you're willingly taking on, and it could be that there's more upside down the line by being early and discovering something like that as a user, but at the same time, all of it comes with additional risk.
I think just to clarify, I don't see scams as synonymous with rug pulls. Scam, that'd be like an outright scam artist that claims to have a legitimate project with tokenomics that imply long-term emissions that maybe raises a bunch of capital from the community or VCs and then just runs off with it. A rug pull is like a meme coin launch with fair distribution. So circulating supply equates to total token supply. Maybe it's even deflationary. And someone just takes a bunch of profit, so chart goes down. rug pulls are great because they're just highly correlated with the meme coin craze. And like meme coins are incredibly important. They catalyze a ton of retail liquidity because people love to gamble. So that's just part of the game with meme coins. Like price goes up, why? Because there's more buyers than sellers. There's no utility, there's no intrinsic value, and that's what makes it awesome. Of course, people are gonna take profit, and the consequence of their profit taking is sell pressure. But like, I see very few outright scams in this cycle. Like people are scared shitless of like 3-letter agencies like taking them away. There are still no shortage of rug pulls, but I think that's like inherent with meme coin crazes.
Yeah, that's a great perspective. Jason, I wonder if you have any thoughts on that too.
Yeah, I mean, yeah, there's different approaches from the user perspective and the protocol perspective. I think from a protocol perspective, you still have a lot of the phishing links going around. You want to be really buttoned up with your communications to your community. You want to give clear guidance ahead of time about what to do, which accounts to follow. The day of, you want to have a place where they could look for the contract address. And when you are airdropping stuff to people's wallets, and those wallets are publicly detectable, or like people can scrape the addresses, you can get some nefarious behavior with fake tokens being airdropped before, that if people sign, it could drain their wallet. So I think from a protocol perspective, you want to be like, really take security and communications, especially day of or leading up to it, be very diligent. And then from a user perspective, I think Dennis hit on it. You just know what you're engaging in. There's a ton of opportunities, especially during a bull market. You don't need to engage with stuff that is questionable. There's plenty of amazing projects out there.
I want to also just like quickly touch on, the name of this panel is Drop-it-Like-it's-Hot9000 or something like that. There's the 9000 in it, obviously hinting out the Avalanche 9000. That's the big talk of the town, and it's supposed to encourage all this new building that's going to be happening on Avalanche. And I'm wondering from like the social perspective, it obviously means like that there's going to be new protocols, new airdrops, new social apps. Like, what are you sort of expecting coming out of this new big upgrade, or since we're ahead of this, like what are you sort of anticipating?
Yeah, I think we see this time and time again in bull cycles. The last time, the 2020, 2021 cycle, when Avalanche did Avalanche Rush, we saw what that did for catalysts and growth within the ecosystem. I'm expecting something similar. What happens during bull markets is there's a new narrative, then liquidity flows, people make money, and then builders look to capitalize on that. And I think just from a price perspective, like AVAX seems to have been suppressed so far. It looks like there's a lot of amazing catalysts coming up. I think we're doing cool stuff on social. You have off the grid and gaming, tons of other things that I think will attract builders who might have not forgotten, but looked at the new shiny objects. There's a lot of new L1s out there, but Avalanche has been growing consistently. So I think these new upgrades will catalyze a lot of growth leading into 2025. And that leads to more competition if you're a protocol, but it's a net positive for the ecosystem as a whole.
And as a builder, you definitely want to be riding a wave, and having that momentum and having catalysts that are creating momentum is definitely a big plus. And I think we're definitely going to see that spread through the ecosystem. As more and more things come online.
I think one of the exciting things that we saw from like the last super cycle, which was like without a doubt the Solana ecosystem got kickstarted by Ava Labs in December of last year, and then Jupe followed it up with their big airdrop, is you have these blue chip projects that perform so well that they have this generational wealth creation. People are then motivated to take profits and recycle it into that ecosystem, and they're also catalyzed to farm for points programs. And so you have this massive uptick in on-chain activity because people want to get rich. Everyone's a rational actor. And so I can say personally, I've never seen as much buzz as I'm currently seeing about like off the grid on crypto Twitter. And I think people are really excited to get like a couple of these blue chip launches that are following the playbook for Avalanche 9000 and showing the value of having your own sovereign permissionless blockchain without all of the hassle that previous solutions have laid in front of founders. So again, it's like all it takes is one good launch in the ecosystem to catalyze that base layer centric bull market. So I hear a ton of buzz. I'm excited about what's to come.
So we have just about like a little over 2 minutes left. So I just want to wrap up with kind of what you guys are already getting at, but first asking about like Avalanche 9000 and what to expect, but I guess then like more generally, and as widespread the crypto ecosystem is, there's a whole bunch of other airdrops. What are you sort of looking forward to in 2025? I mean, I know it's October, but it kind of feels like the end of the year already. But yeah, so like you said, let's start with you because there is an airdrop coming for.
Yeah, I mean, I'm super excited about what we have coming up. We laid out our product roadmap for Q4. We tried to pair the airdrop with sustained feature releases. And Shane said it really well earlier. You have to think about an airdrop in terms of you're paying users for something, right? So if you think about that in terms of marketing or user acquisition, and you could have that with a period of a lot of growth for your protocol, super exciting. What I'm generally excited about, I think heading into 2025 is, I mentioned this earlier, but this is really the first cycle of social apps. In the history of crypto, I'll wrap up, but we haven't really had these consumer apps that anyone could use that abstracted away a lot of the friction of crypto. And now you have stuff like with the Arena, you could log in with 2 clicks, connect your favorite social media app to it, and you have a wallet created for you. You never need to own crypto or even know what it is. I think we're going to keep seeing stuff on the dApp layer, not the L1 fat protocol thesis anymore, and that's really exciting because that's when I think we get like a Cambrian explosion of new innovation in crypto when the dApp layer continues to thrive.
Yeah, and on the gaming side, pretty excited to see what's coming because as you know, good games take a really long time to build, and with off the grid coming online, people are really starting to see the quality of like a true AAA experience. We're launching a AAA shooter game later this year called Shatterline, so super excited about that as well. I think on the gaming side, we are going to see a lot more kind of bigger, better games coming online. These more traditional gaming experiences coming on chain where users won't even really know that it's a blockchain game. They will just play and have fun, and the complexity will be abstracted away for the users.
I'll be fast so we don't get the walk-off music. I'm excited about seeing founders being more thoughtful with methodology to determine who receives an airdrop. So like I was saying earlier, this last cycle was very much quantifiable. You could calculate the EV associated with airdrop farming, and that tends to catalyze these booms and busts. Because if you have a couple unsuccessful launches, then no one has faith in farming, so the on-chain activity dies down. I think the next wave will be people determining, who in the community actually provides value. I think a lot of like qualitative inputs in terms of like who's a thought leader, who's a main advocate, what is their following. Hopefully we don't see like, I think ZK style botches where someone gets an airdrop for like a grammar correction and a PR on GitHub. But I think that next wave of like being thoughtful, being creative, doesn't allow airdrop farmers to farm. So when people see activity for a pre-TGE project, it is very much organic rather than these mercenary airdrop farmers. So again, when we see a lot of buzz for like an off the grid, people know that it's not KOLs being paid to do this, but rather people actually putting their brand and reputation at risk for the hope of some incentive. So I'm excited about changing methodologies.
Thank you all for being here today, and thanks everyone for tuning in.